Good morning, everyone. This is Srikanth Rajan, and welcome back to the Wealth Management Podcast from mpiinvest.com. Now, the first thing that I need to talk to you about at this point of time is on how to manage your investments. So, one of the most important thing is very important thing that you need to know before investing money is how long a tenure you want to invest this for, and second thing, how much is the risk that you can take on this. Yes, that's something very important because many times these things, if you're not taking care of, that is when your investments can actually go for a toss. Now let me tell you an example. So this was this one of my client who wanted to invest money. Now I asked him how much is the tenure he wants to invest. He said, I don't have a plan. I said, if you don't have a plan, I can't suggest. Now the simple thing is, if you don't have a plan and don't have a clear idea of when you want the fund, it makes it very difficult to plan where this can be invested. Now let me tell you of one important scenario. Now there are two types of investment. One is the fixed return investment. Two is the variable return investment. Fixed return is something like a FD, your peer-to-peer investment. So all these things are your fixed return investment, and all the fixed return investment, I would say, they'll give very less return compared to a variable return investment. Now, what are the variable return investments? Real estate is a variable return investment. Stock market is a investing in stock market. Whatever way it is, it could be a SIP, a mutual fund, a PMS or AF. That is a variable return investment. Now, always variable return investment gives you higher return, but then the problem with variable return investment is that you never know how high or low it can go in between. But over a long term, definitely it will give you a good return. But then, if I'm talking about real estate, again, real estate at one place where things can get little dicey because investment into real estate actually needs a huge sum of fund in India. And when you're doing that, and if you can diversify your investments, then what is the point? Because can be chances that one of the real estate investment can go kaput. Like it could just have some legal issue, or your fund may get stuck, or there's a flood in that area. Then that's exactly like a stock market. In fact, in stock market, what we do when we invest in a SIP or a mutual fund or a PMS or AF, the fund is diversified into multiple stocks so that even if one stock has some issue, other stocks can manage well. You can do the same thing with real estate as well. You can invest in good land assets across different regions, because some regions have given 5% return, some has given 15, but you never know because you can never predict which area is going to give more return over a longer period of time. So that is when you get stuck in real estate. So unless you have a huge capital, real estate is definitely not recommended because you cannot diversify your real estate investment. Many a times, most Indians, what they do is 90% of the investment goes into one single real estate, and if that one single real estate actually gets into trouble, the entire financial planning of that person gets into trouble. And the worst part is when your entire investment is just on one real estate property, which is nothing but your own home, and then you are not doing the wisest thing because you get stuck with your one real estate investment, and you don't have money to pay or invest into something else because you're paying EMIs of the home that you are staying in. And the worst thing is, if at all there's a legal hassle or something that comes up in that building, you're stuck. So these are all aspects why you should actually consider your risk ability, your investment capital, and also the term, how long you want to invest. Now, why am I talking about all this today? Well, something very important last week is in the US there was the CPI data that came. It came at slightly lower than the previous month, but slightly higher than expectation of the analyst. Now, as soon as that happened, a lot of people felt markets can be jittery, and they have sold all to the market. Now imagine those people who are holding bad stocks. Will they have the guts to hold it? Definitely no. So whenever such a situation comes, immediately the first thing they do is exit all the bad stocks, which they might be already sitting in losses. Whereas think about those people who are invested in fundamentally strong stocks. You have the guts to hold it even when the market falls. Why am I telling you this? You can never predict the low and high in the market. All those people who are sitting with fundamentally strong stocks had the guts to hold it, and the very next day we could see the markets reversing and going up. So never a stock market goes in a straight line. It'll go up and down, so it'll be variable. So that is something which can put a lot of people into trouble. So that's the reason why you should actually invest wisely, select a stock selectively. All this takes a lot of time, and if you don't want to do all this, simple, start with SIP. SIP can be a great way of investing into the market and can give amazing returns without any headache. That helps you focus on your business as well, and that way you can grow financially. But then don't get into the trap of real estate unless you have that kind of capital, or simple start investing based on your risk and your tenure. So, well, talking about the markets, so last week we could see the US markets actually closing positive for the week, but of course on Friday it is closed slightly negative. That is completely okay. Plus and minus is part of the game. Indian stock markets has almost come close to its all-time high on Friday. It is still staying there. So one important thing for all of us to know is the momentum is continuing. But one thing, remember, the result season is over. Now Indian markets will actually look for global cues, and global markets will make it important. So because of all these things at this point of time, if you see, last week, if you remember, banks have taken good support. SBI has led the rally, and not only that, HDFC is trying to recover from its low. In fact, it came to around the 1,380s range. From there, it has taken a good recovery. So looking like markets will stabilize now because HDFC Bank is yet to stabilize. Just understand this: HDFC Bank has had the highest, weightage in Indian market until few days when Reliance took over. But then imagine a heavyweight stock like HDFC Bank falling more than 18%, and still Indian stock market is near the all-time high, isn't it? Now imagine if HDFC had just stayed back in the same level, where would Indian market be today? So that's exactly what you can think of as a positive side. If HDFC Bank has taken a support, Indian stock market is all-time high. Imagine what could happen if HDFC Bank starts moving up. You feel that? Yes. So Indian markets are kind of poised to be growing further, looking very positive for a longer term. So things are looking great. And if you don't want to miss out on the opportunity, at least start with the SIP. I am telling you this, don't start this now. Next 5 years, you will regret. Next 10 years, you will regret even further. Next 15 years, you'll totally regret. Because Indian markets are going to be on a boom. And then if you miss out this rally, mark my words, you will miss for it. So that's how things are going on for this week. Talking about, okay, yesterday we don't have the market pulse video because I could not reach back on time. Of course, it was unplanned I was supposed to be here before 7, but then that did not happen. So I thought, okay, let's cover it all today together. So that's why I'm just speaking about all these things today, though Monday is not generally a longer one. So now that is one thing that I had to speak about. So apart from that, if you see this week, no major events. There are of course FOMC meeting and minutes coming. Meeting minutes. That is, whatever meeting has happened earlier, the minutes would be coming out now. But that may not make any difference to the market much. At this point of time, people know Indian markets and the US markets have actually seen the peak of the interest rate. So interest rate hike is definitely not going to happen. Now people are only waiting for the interest rates to come down. In fact, at this point of time, like I've told earlier also, it is, if you want to actually go for FD, this could be a good time to go in for FD because interest rates may not rise further, but by going for FD, you can lock in your funds for at least 4 or 5 years, whatever is the maximum time tenure that you can get. But definitely take my words, in next 1 or 2 years, your interest rates will come down by at least 1 to 2% for the FD, and it may not be a great thing to be investing in. In fact, personally, this is not a recommendation. I personally don't invest in FD at all. Yes, I don't have a single FD that I've invested in because most of my money is in the equity market, and the rest are also diversified into beautiful investments which can help me, generate more return from the equity market when the market goes down. So that's something that we've done for all our MPI investment community members. So that way, I'm sure all of us would be sitting with great returns over a period of time. And yes, at this point of time, interest rates are higher. Avoid or postpone your car purchase or home purchase. Not a great time to do that. In fact, we shall actually come out with a video on how you should plan your real estate investment or home investment, because people who have got stuck, I have seen when at MPA community, when we work with different clients, we have been seeing people who have got stuck building a home or buying a home at a very young age without growing their money and struggling to repay their EMIs. Now the worst thing is with the IT recession, expectation, IT engineers who actually took big loans for their homes are now worried because how do they pay their EMI if they lose their job? So these are all things that's happening, which is not a great thing. So always I say real estate should be the last investment that you should plan in your life after your fund and income and investment are stable. That's something which can be done right way. That's it for now. Let us discuss more in detail on what's happening in the market later. But as of today the US markets are closed, so Indian markets may not have a cue from there. Asian markets are looking positive, so we might see a small gap up opening. But then after that, how it moves, well, as a trader, you might have to watch that, but as an investor, nothing to be worried. Just ensure that you stay invested because you can never predict the market. People say at this when the market is at the all-time high, should I start investing now? Do you know whether the market will fall from here or rise further from here? So what would happen if it rises further from here? So at least step in, and then invest in a SIP manner. Just continue, and I'm sure your returns will be great. So that's it for now. This is Srikanth Rajan signing off. Until we catch up with more details tomorrow. Sorry, tomorrow's Tuesday. So Tuesday I'm not there. So Wednesday. So we'll catch up on Wednesday with more details. For now, this is Srikanth Rajan signing off. Wishing you all a great week ahead. Hey, before I forget, do remember to press the like button if you like the content that we share, and do share the podcast with your friends and relatives to help them learn and invest together with us. Goodbye. Have a great day.